Hey everybody, Rob Maurer here, and today we are talking about some interesting feedback arising in the China auto market. We've also got updates on Giga Mexico, EV interest in general, and of course, the FOMC meeting. Tesla stock on the day today, after hovering around flat for most of the day, finished the day down 3.25% to $191.15. The Nasdaq, similar story, declining to 1.6% late in the day, with the big story in the markets today being the FOMC March meeting and the resulting changes, which we'll talk about later on. First though, we'll start off with some automotive and Tesla related news. We do have a very interesting item out of China today, this covered by CNEV Post, relating to some statements made by the China Association of Automobile Manufacturers, or CAAM. We've talked pretty extensively about the volatility in the China auto market right now, especially as it relates to sales numbers and pricing. Tesla has been a major contributor to that volatility with price cuts in the fourth quarter, and then more significantly in the beginning of the year. Not that this is solely driven by Tesla, but this seems to have put some pressure on other automakers, and we have heard reactions worldwide to Tesla's price changes in varying different degrees. Now joining those voices is the CAAM. According to CNEV Post, quote, "The hype about this round of price cuts in China's auto industry should be cooled down as soon as possible so that the industry can return to normal operation and ensure healthy and stable development throughout the year," the China Association of Automobile Manufacturers said in an article posted on its WeChat account today, end quote. Alright, so who makes up this group? Who is this association? It turns out it's over 2,600 companies in China, including some of the biggest automakers, SAIC Motor, BYD, Geely, most of the international brands you could think of, Toyota, Volkswagen, GM, Ford, BMW, Daimler. Name a company and they're probably on this list, and their suppliers are probably on this list, but there is one obvious, notable exception, and that is Tesla. So on one hand, you've got Tesla's CEO saying we'll cut prices as much as we need to. We want to make these vehicles affordable. And here's an investor day talking about how we're going to continue to do this over time. And then on the other hand, you've got automakers around the world trying to find as many ways as possible to basically just say, hey, please stop. So the article continues on to say that the CAAM argues that the price wars are not a long-term solution and that the auto market should return to normal order as soon as possible. They even comment on the accelerated pace of transformation in the auto industry, saying that traditional car companies are under dual pressure of maintaining stable operations and making the transformation with weaker profitability. That is a core component of what we've been talking about here for the last 5+ years. That's a huge part of what has made this industry so disruptible, and it's interesting to see how these little lines of thought sort of trickle out when these economic times become more difficult. The storyline that we hear from these automakers changes from, look, we're making all these investments, look how exciting all these new models we're going to launch are, look at the amazing profitability that all these new developments are going to unlock for our business, to hey, this is actually super difficult, how are we supposed to do this? We need controls, we need regulation, we need support to have any shot at even making a transition like this, obviously. So what are you, everybody else, going to do about it? How are you going to help me? Direct quote from the CAAM here, quote, "The government, enterprises, and the media should look at this rationally and work together to maintain market order," end quote. Now on its own, that can be fine. There's obviously nothing inherently wrong with people working together towards a similar goal, but when we consider it with all of the other context that we've got here, it paints a little bit different of a picture. So I would just say keep a close eye on how these narratives change over time. It can happen quickly, but it can also be pretty subtle. And we're definitely in one of those narrative transition periods where we've kind of gone from like EV hype, a lot of capital, into supply constraints, semiconductor shortages. Now we're into high interest rate environment. Capital is tighter, and all of this money that people were so excited to talk about investing a couple years back, well, the time has come to make those investments, and it's only becoming more difficult to do that. We are definitely living in fascinating times right now. One other quick thing from China, firmly in the rumor mill right now, but Chris Zhang on Twitter saying that rumors suggest that Giga Shanghai plans to increase production capacity to 1.2 million vehicles per year in Q2, while also adding 40 gigawatt hours per year of energy storage plants, saying in a reply that he is referring to a mega factory in Shanghai. So we'll see on that. It's not something that I put a lot of stock into at the moment. Remember, in the Q4 shareholder letter, Tesla said that we do not expect meaningful sequential volume increases in the near term in Shanghai. So saying near term, saying meaningful, both of those things are subjective to an extent, but definitely something to keep in mind. As for a possible megafactory, I think we're all very curious to hear what the plans are after Lathrop, after that 40 gigawatt hours comes online. Tesla showed off their ambitious ramp plans for Tesla Energy at Investor Day, so we can't be too far off of hearing more about how they plan to deliver on that growth after Lathrop. All right, next we've just got a quick update from Joe Tegmeyer, drone flyover of Giga Texas. We talked yesterday about some paperwork that showed some possible deliveries incoming for another Idra Gigapress. We don't know if that would be a 9,000 ton press, but obviously that has piqued interest, so Joe keeping a close eye on things as usual, and has spotted some rather large containers being delivered. Nothing conclusive at this point, so we'll still have to wait and see, but potentially some more evidence of some action there. Next, we've got a small update on Giga Mexico. The governor of Nuevo León tweeting last night that Tesla has confirmed with him that for the reforestation efforts for Giga Mexico, the trees that will be displaced by that construction, Tesla will be doubling the number of trees required by law for reforestation on 1,600 hectares, about 4,000 acres worth of land. Moving on, we've got a new survey from Reuters regarding EV interest. They have surveyed about 4,400 people nationwide in a 7-day poll. They say they found that 34% of respondents would consider an EV, presumably for their next purchase, while 31% said no. I guess the remainder would be a maybe. And in their results, there was a pretty wide split politically. They say that 50% of Democrats said they'd consider an EV, 26% of Republicans, and 27% of independents said they would consider an EV. They also said that 56% of respondents would be willing to pay no more than $50,000 for an EV, and that 35% wanted an EV with 500 or more miles of range, while 37% wanted a minimum of 300 miles. Next, just a couple of quick updates from other automakers. NIO's chief financial officer was on Bloomberg today, saying that he is very confident in NIO's plans for their sales targets this year, which it sounds like they plan to double year over year. So, reiterating that confidence despite the challenges in the China auto market right now. Volkswagen Financial Services has also published their earnings report for 2022, their annual report, and they gave some guidance for 2023 earnings as well. They say that due to the shortage of semiconductors in 2022, that created positive developments for vehicle disposal, resulting from increased marketing of used vehicles. So kind of an interesting effect there, but they say based on those effects, they expect their operating profit for fiscal year 2023 to be down drastically as compared with the prior year figure. So if this is what Volkswagen is saying, presumably it's not isolated just to them, probably a little bit more industry-wide, and something I would expect that we'll continue to hear more about throughout this year. As a reminder, we'll also get some more insight on Ford's business as they do their teach-in event for their new business unit structure tomorrow morning. All right, finally then, let's just go through some of the FOMC stuff. We'll keep it pretty brief, but the Fed today did raise rates 25 basis points as most expected. That raised the target rate to 4.75% to 5%. But the Fed statement in the third paragraph did change a little bit to soften language. Previously, it said that the Fed anticipates that ongoing increases in the target range will be appropriate. That section now says that they're going to closely monitor incoming information and that the committee anticipates that some additional policy firming may be appropriate. So some softer language on future increases. Powell in the Q&A said that that was just to reflect the uncertainty that we've got right now following the banking action. The Fed statement did add a couple of sentences about the US banking system being sound and resilient, but the recent developments likely to lead to tighter credit conditions, but still significant uncertainty around the extent of the impact. As this is the March meeting, the Fed also updated their summary of economic projections that contains an updated dot plot, which has their interest rate expectations as a committee broken out going forward. So as you can see, the changes aren't too significant from December. The median expectation from committee members would be for another 25 basis point increase at some point this year. As for Powell's press conference after the statement was released, he did talk about how the Fed did consider in the days coming up to the meeting pausing rate hikes this time around, but ultimately the PCE and CPI inflation data has come in a little bit higher than they expected it to or hoped it would. Jobs data has continued to be strong, so still felt like a raise was the right move at this point in time. And again noted that there still haven't been really any signs of disinflation in non-housing core services. So that will continue to be a category to watch closely going forward. All right, that is where we'll wrap it up for today then. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and we'll see you tomorrow for the Thursday, March 23rd episode of Tesla Daily. Thank you.